Okay, everybody, here we go. It's me, Gregory Mannarino, Sunday, November 5th, 2023. And this is my newest segment of Markets to Look Ahead. It's going to be just freaking lovely here. First of all, you may notice I got some of my artwork up. I have a lot of original art pieces. I happen to think it's one of the places we need to be moving forward, understanding eventually that this freak show we are in is going to end and cash is just going to make its way into other assets. I'm a pretty diversified guy. Most of you know that. My favorite asset remains physical silver, though, and I will not waver from that. I just feel if you look at some basic dynamics here, the Dow gold ratio, gold silver ratio, understanding that there's no way this current environment is sustainable, and it's clearly not. We are in, I still believe, the early phases of this maximum saturation moment where we're seeing global inflation take off. We were witnessing an incredible sell-off in the debt market, which all of a sudden got really nice, hasn't it? Oh, yes. Let's just put that into perspective. Last week, people, just bear with me a moment here. We watched the 10-year yield drop 50 basis points. 50 basis points. Oh, that's normal. No, it isn't. This is obviously an incredible Herculean effort by the Federal Reserve to keep rates suppressed. Okay, this whole nonsensical thing. Okay, I was going to say something pretty bad. Of how they're in this, oh yeah, they're in the fight of their lives, they're going to raise rates and inflation is miraculously going to get better. It hasn't. I mean, it's astonishing to me. People just don't see it. Inflation continues to rise and the lie keeps getting sold to them, and they're buying it, they're buying it, they're buying it. Not you and me. I mean, we're pretty clear on where this is going. The Fed has been raising rates for one reason, and one only: to cut off credit to small businesses and to crush the consumer. That's it. And this phenomenon, along with this phenomenon of the 10-year yield and the dollar, look, do you realize that we called this out before it even happened? We outlined what the Fed could do to continue to prop up this stock market. They could buy more debt. Duh. They're buying epic amounts of debt right now. They could weaken the dollar by selling dollars, by dumping dollars and buying foreign currencies. I'm talking about on a relative strength basis. The market loves that. Look, this is Markets a Look Ahead, right? Let's put this into perspective. We are now in November. If in fact, okay, and this seems very likely to me, all right, bear with me on this. If the Federal Reserve can manage to keep rates suppressed, they continue to buy more debt, they continue to weaken the dollar on a relative strength basis, where do you think the stock market is going through the rest of the year? If you had to take a guess, you think it's going lower or you think it's going higher? Exactly, higher, and maybe much higher. The market doesn't care about anything. You have to understand. If easy money is promised to the market, which it looks like it is right now, again, risk in this market has cratered. The Mannarino market risk indicator, and I'm telling you people right here and right now, there's not another one like it on the planet. It has nailed it to the wall. You and I watched the risk in this market drop, and the market has gone up. We've discussed this at length. I don't know how many freaking times. If they could, suppress rates, if they could weaken the dollar, if they could, lessen risk in this market, where are we going? I mean, it's all fake. None of this it has no bearing on reality. Again, forward guidance, PE ratios, all this stuff doesn't matter anymore. All right, it's all about easy money, and that's what the market wants. That looks like what the market's going to get. And you have to understand too, the big wig CEOs at these major corporations, their year-end bonus is based on their last quarter earnings. So they're going to pump this up. Stock price. It's based on the end-of-year stock price. So they're going to prop it up. They're going to prop it up. So those big wig CEOs can get millions and millions of dollars, funneled to them. Talking about millions of dollars. How many of you saw this? This lovely man here. You all know who this is. This is Fed President Bostic. Let me see if I can get that face. smug smile. Lovely man. Beautiful man. How many of you recall this? I just want to bring this to your attention because I think it's kind of incredible. This is in your inbox, by the way, if you subscribe to my free newsletter. So this lovely, beautiful man here. Okay. This is... I want to know what you think about this, honestly. So Lions and Friends, I want to share this with you. So we all know Fed President Bostic. Let's just leave his picture up here because he's beautiful. I want to share this with you. So we all know that Fed President Bostic here in this picture. So back in October of last year, we discovered that by accident, over a period of several years, this man's personal investing, what he had done on his own here, inadvertently happened in periods where the Federal Reserve is forbidden to get into the market due to ethics rules here. Now, because of what he had done for several years, he made millions of dollars, but this was just by accident. It was inadvertently. Don't you just love it when you inadvertently or by accident make trades that just happen to be amazingly successful to the tune of millions of dollars? Wouldn't you be smiling like that too? If you by accident made trades that just happened to pay off in a big way? Yeah, it's amazing. This guy's net worth, what we're allowed to know, is around $10 million. So fast forward to now. This guy still serves as the Federal Reserve president. Do you think that's fair? Do you believe that a single one of his trades was made by accident over a period of several years during a time where it was forbidden by U.S. central bank ethics rules at the time to do what he did? But meanwhile, the guy's there, lovely and beautiful. Yeah, that's him. How about writing a letter to your congressman? Yeah, you might get a laughter back. They don't care. You have to understand. Have I told you we have no representation? Have I told you that these people, these things that dwell within the halls of the Federal Reserve, these are the untouchables. If someone were to go after someone like this, you think things would go very nicely for them? I don't think it would. You have to understand this, and I know you get it if you follow this blog. The Federal Reserve not only is this public enemy number one, and I mean that to the highest possible order, but also to the highest possible order. This is a crime syndicate. Do you need any more proof? Do you need any more proof? I don't know. He must be pretty happy, though, because I love it when I make an accidental trade and it goes up millions of dollars over the periods of several years. Oh, it's a beautiful thing. What else would you expect in this twisted thing? So anyway, you heard about this? Another bank fails. Oh, yeah. I want to talk about this. So let me read this to you. Lions and Friends, on Friday, Citizens Bank was closed by the Iowa Division of Banking. The FDIC was named receiver. Okay. No advance notice. This is from the FDIC. I want you to think about what I'm about to say. No advance notice is given to the public when a financial institution is closed. You see, we were made aware, and we covered it right here on this blog, I don't know, months ago, how the FDIC has already warned us there are hundreds and hundreds and hundreds of banks in the same spot. Now, according to the FDIC, again, no advance notice is given. This is privileged information. That should bother you, because that means some people are allowed to know, but you and I, the people that keep our cash in these institutions, we're not allowed to know a damn thing. Yeah, it sounds great to me. Is this the United States of America? Are we really a free nation? What are we free to do? Take it straight, elbow deep in the gabagool? Yeah, I think that's about right. And I wrote here at the end, this is not the end. For months now we have discussed that we would see more bank failures. And I can promise you, remember the words of Gregory Mannarino sitting here. It's not over, people. It's not over. Get your cash out. Where do you want to put it? I know a lot of you are going to ask me that question because you do every freaking day. Try a credit union. Again, credit unions are not for profit. They have no derivative exposure. They don't take the risks that commercial banks do. You understand? I hope you do. I really, really do. Anyway, So with regard to this market here, last week was nothing short of freaking miraculous. Freaking miraculous. It's the best week that we've had of the year. On the back of a cratering 10-year yield, on the back of a U.S. dollar on a relative strength basis falling to the freaking floor, and obviously the MMRI, Mannarino Market Risk Indicator, falling below 300. So now do you realize that we're no longer in extreme risk anymore? We're still in high risk. Look, there's risk in this market no matter what you do. Even when the MMRI first came out, it was around 60 or 80, the MMRI, and was very low risk. That doesn't mean no risk. You understand? But realizing what's going on here, this is a pump on a frankly magnificent scale. A 50 basis point drop in the 10-year yield. Do you know how much debt would have to be bought to drop the 10-year yield, the whole yield curve like that? I mean, we're talking about sums that are literally astronomical. That's what would have to happen. Now, in my view, what we are going to see here, again, looking ahead, is this phenomenon is going to sweep the globe. You're going to see central banks buying a lot more debt moving forward, keeping rates suppressed. And what does it do? Again, all of you who follow this blog, who have been with me for any length of time, when a central bank buys debt to keep rates suppressed, why is that actually done? Okay, how does it work? It opens up a doorway for cash to flow right into the stock market. And not based on forward guidance, PE ratios, earnings, or anything like that. It's just because it's easy money. You understand? Easy money for the big wigs on Wall Street, for the CEOs whose year-end bonuses are based on stock price. You can expect, look, I could be wrong here, okay? But I don't think so. After what we witnessed last week, they already told us what's going to happen. They told us the stock market is going higher as long as they can manage risk, as long as central banks, none more so than the Fed, buy debt and weaken the dollar. All the things that you and I have spoken about means the market, look, I'm going to tell you where my money is, literally. Okay, I've been long this market. I can't tell you how freaking long. I intend to get even longer this market. I mean, I'm going to buy more. My favorite right now is JEPI, okay? You all know that pays a nice monthly dividend. I want the dividend. Not only do you get paid a nice dividend on here, you get exposure to the long end of the market. Now, I'm not saying a single one of you should buy JEPI, all right? I'm just telling you what I'm doing. You want to follow along? You need to do your own homework. You need to do your own research on this. Again, but what also it means? It means that you can expect probably gold and silver to go on sale or remain on sale for the foreseeable future. And that just gives us opportunity. You still need exposure to commodities here. I mean, understanding that this entire thing is going to come apart by design. What's happening here? What is actually going on behind the scenes? Central banks, none more so than the Fed, is dismantling the current system piece by piece to implement their new system, which the Bank of International Settlements is telling us what they're going to do. A central bank, digital currency, cross-border, a one-world currency. That's where we're going. Get used to it, okay? Central banks run the world collectively. Everything else is just a sideshow. You understand? People, they don't tell you this stuff. You can't make it up. Anyway, I was writing a few things down here. So again, more bank failures. We knew this is going to happen. We're going to see a lot more here. And you're going to see more, stuff like this. I mean, just real quick opinion. How is this even remotely possible that someone could accidentally or inadvertently place trades here that pay off to the tune of multiple millions of dollars? This kind of corruption is rampant. If you think that this is the end of this too, and there's been many other Federal Reserve officials, even the Federal Reserve Vice Chair got to walk off, got to resign with tens of the millions of dollars in ill-gotten gains. Was he put under arrest? No. Did he have to pay any fine? No. No, they get away with anything they want to. And I would have that kind of look on my face too. Again, I would never do this. You say I couldn't live with myself, okay? And then they try to sell us. It was by accident. Oh, really? Oh my God. Make it up. Make any of this stuff up, people. You can't do it. It's impossible to do. Freaking is. But what else would you expect in this kind of an environment? You really think you have a voice? You think look, we're worthless we're a means to an end, you and I. And they want us, not only, I mean, they want us dead, but they want us slaves to their system as well, so they can get away with anything they want to. It's the truth. And I think all of you are well aware of it. Anyway, looking at cryptocurrencies, Bitcoin over 35,000 right now. Gold and silver is the place to be. Silver, more specifically, people commodities. I've put all of you in the right spots. We've discussed this all at length to the artwork. See my artwork? I got this. I got a whole art gallery in this room back here. I really feel like that's where Clash is going to move to eventually. So I mean, tangible things, obviously, and some intangible too. All right. I mean, and if you want to talk about cryptocurrencies, I believe that they're going much, 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 much higher. And once this whole thing melts down, because cash it doesn't matter if it's tangible or intangible for the most part. All the market cares about is seeking areas to go to. You know what I mean? I'm not going to ever change my stance on silver, ever. I mean, I can't imagine. I think it's more undervalued today than ever in history. But that's something you and I are well aware of anyway. All right, look, people, I'm out of here. I hope you got something out of this video. If you did, please share it. Get it out there. And those thumbs up, please give me one if you got something out of it. These thumbs up are extremely valuable. The algorithms pick up the video. All right, look, I'll see you all in the morning. Love all of you from the heart. Enjoy the rest of your day, okay? Take it easy.